I'm connected from Austria to Australia. Peter Dunworth. Hi, Peter.
Hey Nico, great to be here.
Thanks for taking the time. Peter is the founder of the Bitcoin Advisor. Most of you know him from other podcasts about Bitcoin. If you want to get into his services for ultra high net worth individual businesses, family offices, and accountants and lawyers, check out the Bitcoin Advisor. We also have some landing pages in German and in English. I will post them on the YouTube description. Of course, the podcast description. Peter, let's jump right into it. We've crossed 100,000 euros the other day. How are we doing in Australian dollars?
Currently sitting at all-time highs, 170 plus thousand dollars. So it's a good time to be a Bitcoiner in Australia with all-time highs.
How do you how bullish basically are you right now?
I I want to temper it with a little bit of PTSD from previous cycles, but I've never seen a better setup for Bitcoin right now. And this is where I think from an investment perspective, most people have huge issues jumping into Bitcoin when they look at a chart going parabolic and they think, I've missed it, I'll just come back and see you in 4 years. But it's that old meme that it's too expensive. And then when it dumps, they're going to say it's go to zero, and then it goes too high again, oh, it's too expensive. But right now, I think is the perfect time to be buying. And there are going to be a whole swathe of different opinions as to what you should be doing right now. But if you don't have any exposure and this is your first glimpse at what Bitcoin looks like, now is the perfect time to be allocating to it. And it's not a time to be shy. It's a time to put in considerable capital, because there's no better setup that I've seen on a risk-adjusted basis for Bitcoin.
Can you explain a little bit what that means? Because of course people who are looking at this for the first time, they're going, well, it's 100,000 now, I'm not buying now. You know, it's the same people who are also not buying at 15,000 because it's too low. But still, could you explain the setup?
Yeah, and this is the problem that's often misunderstood about Bitcoin. And everyone thinks that they wish they had the opportunity to buy Bitcoin when it was, say, $1 or $10 or $100 or $10,000 or $50,000. But the fact is that you have the opportunity to buy Bitcoin at circa 100,000 US dollars now. And if you give the fullness of time to take hold of this asset and let the price appreciation work as it's programmed to do, in the next 5 years, you'll probably see somewhere between a 10 to 100x return on that. And if you look at what are the tailwinds that sort of support something like that? If you're looking at it from an investment case, you need to look at and construct a framework for thinking about investing in this and take into consideration multiple different facets. And this is where investing is never an investment based on a single asset and a single view of a single asset. You always have to look at an investment in context to relativity. What are you sacrificing to put into Bitcoin? So you might be sacrificing bonds. Well, I think it's fair to say that you and I have a fairly low opinion of bonds and the outlook for what that asset class holds. I think you're going to get devalued, debased, and pushed pillar to post and have suboptimal returns.
I just visited the museum, like the city museum. It's new here in Vienna, and it's actually free of charge. So I went there with my son on Sunday, and they have a whole section just dedicated to war bonds from the First and the Second World War. There's like the first and the second and the fourth, and by the sixth war bond, they still were telling people that we're going to win any day now. That did not work out well for people.
Sadly, it's a way of effectively robbing people, and this is where that's still considered a legitimate asset class. But we all know that not only are they robbing us through inflation, but the real money maker for them is through debasement, and the fact that they just print an unlimited amount of money. And this is where the only thing to protect yourself against that is Bitcoin. So back to the investment thesis. Right now, on a risk-adjusted basis, there's never been a better time to be buying Bitcoin. And although the chart looks like it's going vertical, we're all-time highs, and people have a real aversion to investing at an all-time high. But if you look at it from a trading perspective, the best time to be investing is when an asset class has got a duration of time under its belt, it's had a consolidation period, and then it breaks through to a new all-time high. From a technical analysis perspective, that's actually a very strong buying opportunity to buy into that mania of a new leg up, and what my two favorite words in Bitcoin are, which is price discovery.
You've been running the Bitcoin Advisor for a couple of years now. You are, if I'm informed correctly, you've been managing a multifamily office even before Bitcoin.
Correct. Yep.
So can you tell us a little bit about what you're doing with the Bitcoin Advisor, and also how you got your family office into Bitcoin, like the process?
I sure can. And this is where sort of a love of finance and business was really fostered from the family, being involved in small business entrepreneurs. I got to talk about business from an early age. Studied accounting and finance at university. I've always been in and around business, whether it's accounting, finance, that sort of thing. For the last 12 years or more, I've run a multifamily office looking after some of Sydney's wealthiest families. And we've had to advise on a range of asset classes, from assets including property, stocks, bonds, Bitcoin, alternative assets, you name it, we've advised on it. And the important thing with this is, and sort of heading into my 9th year talking about Bitcoin and advising on Bitcoin, is basically assessing the market and the opportunities that are out there. And when we first started advising on Bitcoin, we knew it was a highly speculative asset, and we had disclaimers for our clients that this asset could go to zero because there's no regulations, there's no rules, there's no ruler. There really is a high-risk asset that we justified it by putting in a very low allocation to it. So we'd start with a 1% to 2% allocation, because the justification for that was there was a huge upside to it. There was 100x in front of us. But at the same time, with a 1% to 2% weighting, you could justify a total catastrophic loss or failure of that investment, because 1% to 2% of a portfolio was the equivalent of a hourly or daily change in the stock market. So that's where we started with this. And the problem that we had with advising on this asset is that when you advise on money, you have a fiduciary duty to a client to do what's in their best interest, or in Australia we do anyway. We have certain roles and responsibilities as investment advisors that we need to do what's in the client's best interest. And although we believed that this was a great asset class that held huge opportunity, we had to construct the advice in a way and the ability to hold that asset in a way that wasn't going to get our clients hurt, i.e. they weren't going to have a catastrophic failure and walk out the door with millions of dollars on a thumb drive and then lose their seed words, lose their device, and all of a sudden they've ripped up millions of dollars of capital. So we had to create a solution that allowed them to have best practice self-custody for their own Bitcoin, but do that in a way that had no single point of failure, that if they were ever to pass away or they weren't able to communicate where their Bitcoin was, we had constructed that in such a way that was able to recover that. And one of the proudest achievements of that family office and what has later evolved into the Bitcoin Advisor is that we've been through multiple different clients who have sadly passed away, and from a continuity of service perspective, we've been able to ensure that no one has ever lost a Bitcoin from what we've advised on. And that, to me, from a self-custody perspective, we've been able to pass Bitcoin from the grave on multiple different times, that has ensured that the beneficiaries of that Bitcoin haven't lost a single Satoshi. And that really is, at the end of the day, the most important thing.
Is there a minimum of like a Bitcoin that I should hold with you guys if I want to use your services?
I think it really is about sort of like a typical, and probably one of the most important values I think all Bitcoiners can hold is don't trust, verify. And although I tell you, hey, this is all the things that we can do, one of the favorite parts of the service that we deliver is ensuring that clients actually see us demonstrably prove to them that we're able to deliver on that promise. Mm-hmm. So I'd say, we've got a team of nearly 45 advisors globally that can look after anyone who's got half a Bitcoin and upwards. So it's a matter of dipping the toe in the water, seeing what that actually looks like, seeing the peace of mind that comes from ensuring that there's absolutely no way that you can lose your Bitcoin. And then what we often find is that once clients understand the process and how we work and the benefits that come with it, or the peace of mind, then the ability to go out and get additional Bitcoin is probably one of the greatest value adds that we can deliver, because all of a sudden the fear of loss and losing their Bitcoin has been taken away from them, and their loved ones, their family, their wives, their children, whoever the beneficiaries may be, are no longer responsible for the recovery of that Bitcoin, and they've got a bulletproof plan for recovery upon death, that then allows the client to go out and purchase more Bitcoin.
And if I understand correctly, it's not only called the Bitcoin Advisor, you work with literal advisors, and you have people in all kinds of languages, including German, English, French, Italian, Spanish, Dutch, and so there's. I don't have to do this in English, right? If I
Absolutely not
work with you guys.
Absolutely not. We've got we cover all of those languages.
That is good to know. Can you real quickly explain the setup, the multi-sig setup that you're using?
Sure can. We use a multi-sig. We call it collaborative security. We set it up in a way where we use a 2 of 3 multi-sig. So what that means is that there are 2 private keys and 3 public keys that are required in order to move your Bitcoin. It's a very simple setup, and that, I guess, triumvirate of key holders allows us to ensure that there is no single point of failure at any point in time. And by no single point of failure, what I mean by that is, and how we structure it is, the client holds a key and they own the account with us and the software provider. The software provider holds a key and we hold a default backup key. Now, the beauty of having 3 and a 2 of 3 multi-sig is that in the event that something happens to the client, the other 2 key holders, subject to a whole host of legal provisions, such as a notarized death certificate, notarized last will and testament, notarized ID of the executor and the beneficiaries. Once all of that legal process has been undertaken and confirmed, then the other 2 key holders can sign a transaction to move the Bitcoin to control of the executor for distribution to the beneficiaries. Now, that process can take up to 2 years, and we have a clause in our contract that under Australian law, we have up to 2 years to sign a transaction in the event of death. And we do that for 2 reasons. Firstly, to protect our clients in the event that they haven't actually died and it's a fraudulent document that's come in. If for any reason we doubt that there could be a problem there, we don't want to be.
If somebody tries to get my Bitcoin, but I'm actually still alive, I have 2 years to visit you in Australia and say, hi, I'm here.
We'll be reaching out to you on multiple different occasions, and this is where, if you look at, I've had a huge advantage of being able to benefit from a lot of the work my brother's done on exchanges over the years, and he had a business starting nearly 10 years ago on a Bitcoin exchange, and we get to talk about all of the scams and frauds that have tried to be perpetuated on his service and ours. And what we find happens is fraud happens at speed. And for that reason, we don't want to be rushed into any signing transaction. A 2-year period is more than enough if you decide to go to Antarctica for a 6-month sojourn, holiday down there, and you're not contactable. We have the ability to delay that transaction because in the contract it's written in that our ultimate goal is to protect the client from loss. And we don't want a transaction happening at pace where we have a distressed partner or beneficiary come in and say, oh, you've got to move this immediately. So-and-so's died. It's like, thank you very much. We'll do our due diligence and follow up and follow all the legal due process that we need to in order to confirm that that has actually happened. The other thing that is, I think, a key benefit for having that 2-year delay in the signing of the transaction is that it allows us to work with the family of the deceased and actually start educating them on why this asset was the most important asset that family member who passed away had. And then hopefully, once they've been through 2 years sitting in this and actually feeling like they own it, they're going to have a much better understanding of why this is the most important asset in their estate that they do not want to get rid of, rather than most people look at that offhand, dismiss it, think it's a scam, it's a Ponzi, it's a this, it's a that, and they'll sell it immediately. But a 2-year window of education enables us twofold: to protect the client in the event of fraud, and also to educate the family and take them on the journey that, hey, this is really important from the family member who's just passed, that these are the values instilled in why he held this and held this so important for the family.
You have one sentence in your presentation that really sounds very rings very true. The single point of failure is us, right? It's humans. It's not and I can totally agree with this. I'm don't trust, verify. But the thing is that the person I trust the least is myself in this. That's why I think that It's just smart to have different approaches to custody, and I think that with Bitcoin crossing $100,000, Bitcoin crossing 100,000 euros now, all kinds of people are now suddenly gonna wake up in the morning and say, "Shit, I should have done this half a year ago," but now here we are. I'm still better to get into this, so I will definitely try your service with a part of my small stack of coins, and maybe last questions with Bitcoin advisors. You do have an app as well that I can use, right?
Yeah, we leverage off all of the multi-sig providers we use, and depending on where you are, what hardware device you use, and what phone system you use, whether it's Android or Apple, determines what would be the most suitable to you. So we use literally all of the multi-sig providers, and I think one of the most important things that we deliver is when we talk about being and having no single point of failure, we want to have no single point of failure from all of the software providers as well. Mm-hmm. They all do a wonderful job, and I'm really close to all of them, but and from a personal point of view, I don't want to have a single point of failure with any software provider either. So we need to look at every single facet of this multi-sig and ensure that there's no single point of failure. And for that reason, we've got multiple options across many different software packages.
Do you see, more demand right now that we have crossed the 100Ks? Have you seen the bull market starting in your own business?
Yes, and I think two things happen with price rise, what I call price discovery. There is the sudden realization that all of a sudden the amount of wealth tied up in Bitcoin has become, no, I wouldn't say unmanageable, but it's uncomfortable holding that level of wealth in a single sig device or being fully responsible for it, and then having a non-professional person back up that Bitcoin. And you end up, there are usually two catalysts for the need for our service. The first is the price has gotten too high for someone to feel comfortable having millions of dollars of Bitcoin lying around the home, and they fear a $5 wrench attack, or they fear loss, or they feel theft or fraud, you name it. There's a whole multitude of reasons for that, but it typically comes when the price goes substantially higher. And at the same time, that Bitcoin now makes a substantial amount of their wealth. The other reason why people contact us is that, and this is where I just want to make sure to all the Bitcoiners out there, and it feels like Europe is home to the most OG of OG Bitcoiners. I never pretend to say, hey, everyone should do this. Every single custody option is a trade-off. And so I always say, no solutions, only trade-offs. We think we've made a whole host of trade-offs to deliver a solution that solves a big issue or concern for people. And the second reason why a lot of people contact us is they now have family. So if you're a single sig, fully responsible, self-autonomous, that's fantastic. And I'd never try and talk you out of that. But often the situation changes when a wife comes along, when children come along, and the providing for the family is highly correlated to securing your Bitcoin. And the thought of losing your Bitcoin means that your loved ones are going to be impacted with a lower quality or standard of living. And for that reason, people reach out to us and just say, right, I need that problem solved so that I can get on and live my life and not worry about if something happens to me, kind of like a life insurance policy, but a whole lot cheaper. I want to make sure that my family is able to continue living the life that they want to live in the event that I'm not able to provide the Bitcoin and move the Bitcoin at certain times for them.
You've talked about OGs. It's true that especially in the German market, even if it's not OGs, we have enormous amounts of Bitcoiners, very, very convinced Bitcoiners. Germans and Austrians love to save in money, and Bitcoin is money, and they've got all the fiat lying around, like hundreds of billions and even like trillions of euros lying around on the savings account. So there's a lot of upside here. But my question would be for people who watch us now and are getting into Bitcoin now. You said that it's better on a risk-adjusted basis. Can we still expect basically jumps like we had them in the past. If you bought Bitcoin in 2012, you now have more money than you can ever need, probably on a like for a normal person, right? Can we expect something like this to see the same in 10 years, or are you expecting diminishing returns? Is it going to be boring going forward? What do you see?
I think it's going to be anything but boring. And if you're new to Bitcoin, you're in for a treat. You're in for a wild ride. You've never seen volatility like this. And now, all of a sudden, I firmly believe that there are more gains left in front of us than behind us. So for those of you who thought you've missed out because you missed buying it at $3 or $10, and it's gone to now $100,000, I actually think there's more gains in front of us than behind us. And if you look at just a simple supply-demand curve, you now have less Bitcoin on exchange than ever before. For the Bitcoiners who were early, all of the Bitcoiners that I speak to, their number one favorite asset is Bitcoin. Yeah. And the number one thing that Bitcoin teaches people is to stay humble and stack sats. And what's really interesting about this is that there is not conspicuous consumption with a lot of Bitcoiners that I'm aware of. There's a huge amount of conspicuous consumption in the crypto industry. It's leery, it's flary, it's people wearing big watches and big hats and huge jewelry and, showing everyone how rich they are. But I go to Bitcoin conferences and I know a lot of OGs who are there who walk around in basically t-shirt and shorts. There's no, hey, look at me, I'm flashing my wealth. People, the Bitcoiners I know aren't like that. And so I look at that and I think that's what's happening from a supply side of things. So I don't think the OGs walking around in t-shirt and shorts and, driving nice cars, but not, Rolls Royce and the rest of it, they're not going to be spending more money. They're not going to be buying bigger houses and jets and this and that. That's just not what Bitcoiners predominantly do. And then I look at the pool of capital that is coming into this space. And I think we have no idea how much capital is coming into this space right now. And this has basically been jettisoned by the ETFs being rolled out on the 11th of January this year. That has opened up a pool of capital that we've never had access to before. And I look at this and think, in addition to that pool of capital opening up, that's on the equity side of things. Then you've got the whole corporate bond market that's been opened up, and the entire bond market has now been busted open with Saylor and what he's doing, which is fundamentally a proxy for buying more Bitcoin. That's a $300 trillion market that's got to fit into a tiny little $2 trillion asset class right now that's the most tightly held asset in the world. So I look at this and I think people aren't thinking about this correctly if they think that there's not more opportunity in front of us than behind us, because the pools of capital are so much larger coming into this space right now. And the opportunity to buy Bitcoin is so limited relative to where we've been. I look at this and think this right now is the best time to be buying, because in addition to those supply-demand dynamics that are set up as such, for the first time in Bitcoin's history, we now have a government, like a major government power in the US, who is supportive of Bitcoin and Bitcoin policy. I look at this and I think Bitcoin has never had government support, yet it's achieved a $2 trillion outcome. What can Bitcoin do? And I know this is sort of a contentious issue for a lot of Bitcoiners because they don't want government help. They want to keep it out of it. But it's like, hey, if someone wants to help us, I'm happy to take the help, because this thing's only going to grow bigger and faster with the help and support of the government, rather than an overreaching government that's tried to destroy not only Bitcoin, but the broader crypto community. So I look at this and think you've got supply demand lining up, you've got regulations, government support. This is the first time this has ever happened.
I don't want to sound like a conspiracy theorist here, but if BlackRock decided, we like Orange Coin, then the government decided that they also like Orange Coin, is basically just downstream of that. I mean, if you think about it, but it's still insane to see, the president talking about Bitcoin, or the president-elect Trump talking about Bitcoin. You have basically Bitcoiners on every level of government in the US now. How are things in Australia? Are things changing now? What's the media saying about Bitcoin? What's the politicians are saying? Is there anything happening there?
Very little. We've got a few of our advisors who work with the Australian Bitcoin industry body, trying to push an agenda and help improve outcomes that we're having a tough time with. We're still suffering quite heavily from Operation Choke Point 2.0, with a very, very dismissive banking sector that is very unhelpful when it comes to onboarding clients and getting them access to Bitcoin. We've got to fight on a daily basis with the banks to actually have clients transfer their very own money. Banks don't want to see it. I understand why they don't want to see it. They don't want to see that cash leave the system, because once it goes into Bitcoin, it typically never comes back. So there's just a much... It is a hostile regime when it comes to the regulation of Bitcoin. And this is where, from a personal perspective, I would love regulatory clarity around Bitcoin in this country. And we just don't have it. But the fact that the US government, the leader of the free world in the USA, is now creating policies and procedures, regulations to support Bitcoin, I'm hoping that that has a top-down, filter-down effect, that we're going to benefit from their policies as well, and we'll just adopt them.
How do you see the structural changes, starting with the banks maybe? Wouldn't the next logical step be banks giving you fiat loans backed by your Bitcoin? So I don't have to sell any Bitcoin anymore. Basically what the rich people do with their assets, but now for everybody?
Yeah, I think that is to come, but the first layer that needs to be built out, and I can absolutely say that this is happening in real life because I've spoken to the players who are responsible for it. But two of the four major banks in Australia are now working on a custody solution. So that's the lending is the next step. They need to have the ability to custody that. The feedback I've received is they're not happy with the options that are available in the marketplace at this point in time. They want to build their own. I completely understand why they want to do that. They're in the business of trust, and they don't want to trust anyone. They want to build everything from scratch and make sure it works. That to me represents a risk in itself, because these are guys who are not native to Bitcoin. They don't understand, the fact that it's a digital bearer instrument and can be lost instantly forever. But they're pursuing that, and that's the first layer of institutional adoption that then lays the foundation for the next layer, which you talk of in the lending option. But this is where, with a supportive government or supportive government regulations, we can have in the US a whole host of policies initiated which is going to improve lending outcomes. And if you have support in the US government with the support that they've given to the US housing sector extended to the US Bitcoin sector, we could see a range of products like a term loan that extends itself to Bitcoin, where there's no need to have the Bitcoin revalued over the first 4 or 5 years of its life of the loan. And they would custody that in a way that would ensure that as long as you hold that for a 4-year period, you don't have to have a margin call on that facility. And people forget that the government has created the options on the US housing sector to create those outcomes as well, because they were never available. But government regulations and support through Fannie Mae and Freddie Mac enabled a whole host of credit changes that made owning homes much more affordable. So all of those innovations I expect to come to Bitcoin, but they're going to be extended to Bitcoin lending, where you as a Bitcoiner are going to be given the best loan terms available in the world if you provide Bitcoin as collateral for your loan, as opposed to any other asset.
What do you think is the political motivation for, especially the American government, to do this? Is it just the crypto industry giving money to Trump and Harris before the election, or is there a deeper strategy here?
A cynical view would say that it's just it's a quid pro quo, that you scratch my back, I'll scratch yours. So the crypto industry, hugely supported Trump and helped get him elected. There are a lot of fence sitters in the crypto industry that said, you know what, if you're going to rob my ability to have a future, I'm going to make sure that I vote for, the orange man and the orange coin. That said, I think if you peel the layers back and you look at who's advising Trump and the team that they've got, they understand the power and they understand the problem that the US has. And I think if you look at a too long didn't read on what is the major issue facing all of Western society right now, we are saturated in debt. We are up to our eyeballs in debt. across every entity structure. So from a personal, a corporate, and a government structure, we are up to our eyeballs in debt. We can't service any more debt. Then when you go across the asset classes, you look at bonds, by very nature a debt, but they can't sell bonds anymore because no one wants them. They're up to their eyeballs in debt. The stock market, up to its eyeballs in debt. The corporate bond market, up to its eyeballs in debt. The property market, up to its eyeballs in debt. No one can afford any more debt. So the premise of the problem is that we have a debt problem, but what we really have is a collateral problem, because you only have a debt problem when you can't get your money back. Now, what that means is we can't sell the assets that these debts are securitized against because there's nothing there. There's no there. So what we need to do is we need to create equity so that we can then sell these debts to recover what's owed to us. Now, the fastest way to recover or to improve equity is to just jam a dump of money into Bitcoin, because that's going to give you your best bang for buck. That is going to give you your best return on investment. By putting $1 trillion into the Bitcoin market, that'll probably create $100 trillion worth of equity to recollateralize the entire financial industry.
That is what Michael Saylor is talking about when he talks about Bitcoin being the perfect form of capital, right?
Correct. And the other thing that I think Saylor talks about, or we might just allude to it, but the really important thing to think about this is, and we've probably been subjected to this type of argument from friends and family, is that people tell you that you can't live in a Bitcoin. So you need to invest in a home. And it's like, that's the feature, not the bug. And when people understand that by the very premise that you can't live in a Bitcoin, that then becomes the asset that Wall Street wants to trade and speculate on. And that is going to detach Wall Street from Main Street, because up until the advent of Bitcoin, there was never an asset that you could trade that didn't have an impact on Main Street, because Main Street sacrificed all of their assets so that Wall Street could speculate. And you look at how that started. That started with mortgage-backed securities in the 80s and ultimately led to the US housing crash, because everyone was getting a mortgage to buy a property, and they were basically giving out ninja loans, no income, no job applicant loans, for people to buy $1 million homes who literally were stacking shelves for a living. So you had a deterioration of the quality of borrower. At the same time, they were borrowing huge amounts on collateral that was effectively worthless. Again, the collateral problem, not the debt problem. And so you had people speculating on homes, on all sorts of things that affected people's day-to-day living. Now you have an asset in Bitcoin that allows people to speculate on day-to-day, and Wall Street are degenerate gamblers by their very nature. I say that with all due respect, because that's their role in society. But they now have an asset that they can speculate on, that's the most volatile asset in the world, that they can trade all day till they've had their fill, that's not going to affect Main Street. And therein lies the feature, not the bug.
So if I was explaining this to, a kid, and they would, or a mainstream journalist basically, and they would tell me, Bitcoin isn't backed by anything. What you're saying is actually that the debt-based system doesn't have sufficient backing in the real world. There isn't enough real stuff, real collateral backing up the huge mountains of debt that we have. But there is one thing that we can actually blow up to a size to recapitalize the whole system, and that would be Bitcoin. So Bitcoin in this is literally the real thing backing the other thing. So, and of course, if something's real, it doesn't need to have any backing anymore. It's already there.
Correct. And in the wise words of George Costanza, it's not a lie if you believe it. So I'm being facetious when I say that, but what we have with our existing financial system at the moment, and the problem that we have with it, is that we have a system of rehypothecation. We have a factoring of our system whereby you have $1 of equity and you have $20 of debt. So if you were to create a structure that looked like that, it looks like an inverted pyramid. You have a little bit of equity with bigger debt on top of it. And that is what I call an under-collateralized system. And now how Bitcoin works is that if you want a loan in Bitcoin, you need to over-collateralize that. So what you have is, you want to go and borrow, call it $10 in the Bitcoin system, you need to put up $20 of equity. But if you want to borrow $10 in our system, you only need to put up $1, if any dollar at all. to borrow $10. So you've got an inverted pyramid is the existing system that we work with, and you've got a pyramid with a very wide base and very little debt, if any, which is an over-collateralized system in Bitcoin. And I look at this and I just think, what one looks more stable? And even a 5-year-old can tell you that the over-collateralized system is going to be far more stable than the under-collateralized system. And to sort of put a bow on this, therein lies the opportunity for Bitcoin to grow into a system and an asset class that not only is as big as the bonds, but actually is larger than the entire bond sector, because it now needs to support as collateral our debt system.
Are you basically saying that you think that something that was invented 16 years ago and published as 9 pages of PDF by a guy we don't know is literally going to save the whole Western financial system?
Not only the whole Western financial system, the whole global financial system. Because I'm not sure if you've seen what Chinese bonds have done overnight, but they're not in a good shape either. So the whole world is indebted, and yes, I'm telling you that magic internet money is here to save the entire financial global system.
But that would mean 2 things. First of all, it would mean number goes up to an amount that is completely unimaginable. So, I mean, give me your best guess, please.
It should be in the billions of dollars.
For 1 Bitcoin?
Fair market value, 1 Bitcoin should be well over $1 billion. Yes.
At what point?
My expectation is by 2040, we should have Bitcoin in the billions of dollars. So that's 16 years.
So
this is why I say, I know what people are going to say, and they're going to say it's crazy and you're mad and the rest of it. And one of the things I look at, I've stared at this problem probably longer than nearly anyone else. And a lot of people will say that I'm crazy, and I'm happy to feel that way, or for them to think that I'm that way. But herein lies wrapping back to what I said earlier, that there is more upside left in front of us than behind us. And to those people who are questioning me and think I'm crazy, and I'm happy to take those slings and arrows, but for the next 5 or 10 years, you're going to think I'm crazy if you don't act. You're going to say, hey, that guy's crazy, look at him with a crazy valuation. And then from 10 years onwards, they're going to figure out that I'm right and they haven't taken action. And we're going to know that they're crazy. And not only that, almost idiotic for not taking any action and having a punt on what could be.
Peter, $1 billion Bitcoin would mean a market cap of what? If it's at, let's say, 2 billion today at 100,000, that would be 20 for a million, and then that times 1,000.
That's 10,000 times higher than what it is now. So what's that? 10,000 trillion?
I have to do like I learned this in another podcast. I'm not doing public math, but I do have a calculator here. So that would be 20 times 1,000, which is of course 20,000. 20,000 billion, which would be 20 trillion? No.
No, it should be. I would have thought. My expectation is it should be somewhere between 2,000 to 20,000 trillion dollars.
But that's more like there's 900 trillion in the whole financial system today.
Correct. And that's an under-collateralized system, and we're moving to an over-collateralized system. So the Bitcoin needs to grow to be bigger than our existing system by the very nature and definition of an over-collateralized system.
Growth to 1 billion a Bitcoin in the next 15 years, 16 years, wouldn't that be too quick?
It's never too quick, not when you're holding it.
No, I know, but it's still. I mean, the whole power law model, or the whole power law thing, that would not be in accordance with the power law. That doesn't work out to be a billion, right?
I think Giovanni's done wonderful work, but do I think it's going to hold? No, it's going to break to the upside, and that keeps in with what he believes is, I guess, magical thinking. But I just think by the very definition, if you have debasement happening at 7.5 to 10% per annum globally, maybe 15%, that's an assumption that I don't think the power law takes into consideration that needs to be considered, because you've got an exponential decay. So who knows, when you consider that and put that into the metric, there's a very real possibility you could get to $1 billion Bitcoin in less than 20 years.
Does the fiat money structure still stand at that point?
Yeah, I do. And I think the stable coins are going to be through the roof. And I think the credit, the US global credit, is going to be a juggernaut. It's going to be bigger than what it is today.
You mean the treasury market?
I think the US Treasury market's going to be much, much bigger than it is today. And I think global credit, full stop, is going to be much bigger than what we've got today. People think that the credit's going to go away. Credit's not going to go away. Credit will always be here. It'll need to be over-collateralized, not under-collateralized. And this is where that merging, Bitcoin needs to grow into that, and it needs to grow really quickly in order to deliver that.
I talked about the Western financial system before because there's a political side to this, right? So if the Trump administration lays the groundwork for this recapitalization of the financial markets and of the blowing up Bitcoin to enormous proportions in order to use it for a new start, that would also mean that the US would stay in the international driver's seat, so to say.
Mm-hmm. Yeah. And that's a national imperative. That's a strategic initiative that they need to maintain their universal grip on as global leader. So to me, it makes sense that they're going to do whatever they have to do to maintain that position. So that means they could wake up tomorrow and say, in order to do it, what happens if the Department of Defense gives an issue that we need to have as much Bitcoin as possible at any cost? Well, they're just going to buy Bitcoin. They're going to set the floor at $1 million to start with. And then you'll have a bidding war. Russia will print their money and they'll say, we'll give you 10 million. China hasn't even entered the picture yet. They could say, we'll give you 100 million. And now we're into hyperinflation, and the only people benefiting from this are going to be Bitcoiners. And this is where Bitcoin, because it's globally ubiquitous and it's accessible to anyone who's got a smartphone, and there are billions of smartphones globally, everyone on earth can participate in government greed. And rather than being debased on a personal level, if you're holding Bitcoin, you're just going to benefit and have equity participation in the debasement of your dollar.
It would also mean that people, who are at a huge disadvantage today in Africa, South America, and Asia would be able to plug into the system and just be, on par with us in the West.
Yes, that's exactly what will happen. And this is what's completely novel about Bitcoin that often gets lost. And this is where, it's fun talking about large numbers, but the most important thing about Bitcoin is that you have an incentive structure that aligns every interest in the world. Nothing else has the ability to do that. And the other thing that's really critical to that aligning of interest is that it's equal opportunity for everyone, and everyone can participate in it. So all of a sudden, no one is disadvantaged. And it's the first time in human history that we have an economic apparatus that is not a zero-sum game. Every player can benefit. That's a huge, huge thing that not a lot of people talk about.
It's a huge thing because everybody can participate, and that's just one thing. I mean, there's never been an asset before that I as an individual can buy on the same level and can store on the same level. Sometimes even easier than somebody like a hedge fund or a nation state, because the nation states, they haven't, like you are in the custody business, right? The nation states haven't figured out custody, right? They just haven't. I don't know where El Salvador is holding their Bitcoin. I don't know where Bhutan is holding their Bitcoin. I don't know how the US is doing it. It's just a black box and nobody knows what's happening.
That's it. And this is where we're not really going to know what's happening until much, much later. But this is it's equal opportunity, and this is the stuff that the DEI guys and the woke guys of the world really dream of, but they don't understand it, so they don't believe it's actually the thing that's going to solve a whole host of issues. But to me, I look at this and think there are three assets globally that are derived in every currency. You've got US dollar, gold, and Bitcoin. So every person on earth can benefit from Bitcoin. And it's not to the disadvantage. No one is disadvantaged by other people taking advantage of it. That's the first time in history we've had an asset like that.
I absolutely agree, but I do think you're not cynical enough about people pushing DEI and woke stuff. They don't want to solve the problems. They want to keep the problems and have some bureaucracy that they can work in, put on top of the problems. That's just, I mean, we know all about this in Europe. But and this would be already one of my last questions. Going to an equity-based system like this would actually come with a whole new set of political ideas and directions, right? Maybe not new, maybe like something that we have seen before in history, but completely different to what we see today.
Yeah, and this is, I'll tell you the really interesting thing that I think is probably the biggest, or one of the biggest things about Bitcoin is that Bitcoin, at the moment, our existing system debases us and robs us of our economic power on a day-to-day basis that we have no control over. If you save in Bitcoin, the very debasement that is robbing you in the fiat system is empowering you and building your purchasing power in Bitcoin. So you effectively have, by having Bitcoin as your unit of account, you have equity participation in the economy. And so the more debt that gets created, the more you're rewarded by owning Bitcoin. And I look at this and think, what an exquisite tool for combating government excess.
I absolutely agree. And I think that we see the first, political signs of this with somebody like Milei in Argentina, somebody like Trump even in the US. I think we'll see something like this in Europe very soon. Now here in Austria, it's like before the election, everybody was like, no, we have money. We don't have to, look at the deficit. And now after the election, it's basically this we cannot pay for, this we cannot pay for. Here we have to. So people are starting to get it. Peter, thank you very much. This made me very bullish on Bitcoin. I'm glad that I'm already working in the Bitcoin ecosystem and in the Bitcoin industry. Please tell us, of course, I'll put the landing pages that we've created for the Bitcoin Advisor and for my special code Nico. I'll put them in the descriptions. But please tell people where to go with regard to the Bitcoin Advisor.
Great. We've got a website, thebitcoinadvisor.com, and that is advisor with an ER. You can reach me on Twitter, Peter BTC Advisor, again with an ER. We'd love to help. You can book a meeting with us, book a free call. We want to make sure that if you're on the journey and you're serious about taking your self-custody to the next level, we'd love to help you and ensure that you can secure generational wealth for generations to come. So,
sounds like a plan, Peter. Thank you very much. We should do this again during the bull market of 2025. But until then, I would love to do that. That was fun. We'll do that again. But until then, Merry Christmas and a Happy New Year, and I'll see you soon.
Thanks very much. All the best.
All the best.